So in this lesson, we're going to go over an introduction to audit reports. We've alluded to these audit reports in all of our lessons, and so I wanted to give you an intro to audit reports. Now, there's a whole other section that's just devoted to audit reports, so we won't go in too much detail, but I think it's important to understand it before going in to the rest of the lessons about auditing. Okay? So we've got really 4 audit reports that we can use as auditors when we evaluate the results of an organization's financial statements and whether or not they are free from material misstatements. Okay? The first one, which is the most common one because most companies do follow the rules, is called the Unqualified Opinion Report. Now, when I was a student, I always got this confused because I saw un and I kept thinking that that means that they did something wrong. But in auditing, an unqualified report just basically means that it's free from material misstatements, or it's not qualified. We're not qualifying our report or our opinion because of something that they did wrong. So unqualified opinion says it's free from material misstatement. So that's a clean opinion, and we'll write that here. It's a clean opinion. Now, the next type of opinion can also be used. It's called a qualified opinion. Now, a qualified opinion says that the financial statements are fairly stated, which means everything except for this one thing we're about to tell you is fairly stated. So it's an unqualified opinion. However, because of this one thing, we can't give it a clean opinion. So financial statements are fairly stated except for blah, blah, blah. Okay, whatever it is. And usually, if you're going to use a qualified opinion, it's a small in nature kind of an issue that it doesn't warrant some big issue, okay? So that one part might not be fairly stated, but everything else is, and you should trust everything else, but we want you to be aware with, there's an issue here and management won't change it, okay? We'll talk about changing it after we talk about all of these 4 things. Okay. The third one, which you don't want, is the adverse opinion. So the adverse opinion basically says we as auditors have done all the work, but based on the outcomes of it, it's not fairly stated and shouldn't be relied on. Okay. Very rarely used, but could be used because the client needs to be audited for a bank whatever, and we go in and we try to do everything and we do everything and we looked at everything and we said, no, you can't rely on it because it's not fairly stated in accordance with GAAP. And that sometimes is the issue. It's not done in GAAP, it's done in some other way, and they're just refusing to do it because there's just too much work involved. So the adverse opinion is given. So of these 3, we have the clean opinion, everything is clean except for this one thing, and you know what? We've done our work, we've looked at everything, but it's not worth it. Don't rely on it, it's not fairly stated. Okay? The last one is something that we don't often see as well, but we do have it, and that's called the disclaimer. Now, when do we use disclaimers? We use disclaimers when we have insufficient evidence. Okay? So we go in and we say, we need access to X, Y, and Z, and they say no. And we say, okay, we need access to X, Y, and Z, otherwise we can't give you an opinion. No. And there's no alternative procedures, and alternative procedures says that maybe plan A, we were going to do this to substantiate an assertion. Well, they won't give us plan A, so we're going to go to plan B, which would get us to the same answer for the management assertions, and we can't do that. So now we're out of roadblocks, we're out of plans, and so now we're at a roadblock. We can't really tell everybody that everything's there, so we're going to disclaim an opinion. We're not going to really give any opinion. We're going to say there is no opinion to give, and it may be because we have insufficient evidence. Now, I want to take this with a grain of salt. You may have insufficient evidence, but you can back it up with some other testing. That's not insufficient evidence. A lot of times insufficient evidence may be because management has threatened not to do it or not to give it to you, or you're unable to get it because of management. That's when you get insufficient evidence. Okay? We can also disclaim an opinion if somewhere down the road we have an independence issue, a huge independent issue which cannot be resolved, which means we're going to do all the work, but now we have this independence issue that we didn't even see before, and so you can't rely on our opinion. We can't give an opinion because we're not independent in nature, independent in our opinion. Something's pushing us to maybe give a good opinion when we really shouldn't be giving a good opinion, or good opinion, but that's because we're giving a good opinion because they're a friend or something, okay? So that's an independent issue. Now, we've got all of these. The most often used is unqualified opinion. Now, what about going back to this qualified opinion? The financial statements are fairly stated except for. Now, when we review the books of a company, we are able to have them change something based on our testing. So for instance, let's say materiality was set at $1,000. Okay? Cash is misstated by $3,000. Okay, so cash is misstated by $3,000. Our materiality is $1,000, which means it's over materiality, which means they've got to either fix it or we're going to issue a qualified opinion. Now, a company is able to fix it, and oftentimes they do. They'll fix it because they want the clean opinion rather than the qualified opinion. So in auditing, our job is to search for things and come up with answers, but management has an opportunity at that point to fix it. So it's not like, hey, here's your financial statement, we're going to audit them as is and you can't fix them. They can fix them, and when they fix them, let's say in this case they fix it, then the misstatement is no longer 3,000, that misstatement is 0, okay? But as we review those misstatements, we're also looking for other issues as well. So we're not just saying, hey, good, now it's 3,000. Now it's 0. So there may be other misstatements or other issues in their internal controls that we now need to look at because of this misstatement. So a company does have the opportunity to go from here to here if they change whatever they're supposed to change based on our recommendation. Some clients will not change it, and that's when a qualified opinion is issued unless it doesn't meet the materiality. Okay? So that's important to understand, because I think some people think, oh, it's a one and done thing, but in reality, the client does have an opportunity to fix those mistakes and get that unqualified opinion. Okay? Now, as we go through this, I wanted to really quickly, or maybe not so quickly, but I wanted to go over what an unqualified opinion looks like. Now, obviously, I'm teaching from a board here, so I can't put an unqualified opinion in. If you are watching this video and you're not taking this as a class on one of my classes, what you should do right now is pull up an unqualified opinion, and they are all over the internet. So pull that up. You can pause this video, pull that up, and print that out, and put that right in front of you, because I'm going to basically read an unqualified opinion, and then you can follow along. If you're in one of my classes, go ahead and pull out your books. In your book is an unqualified opinion in the chapter, and open it up to that. So in an unqualified opinion, we have a couple things on this opinion. Now, in all honesty, opinions are pretty much set in stone. So the reason why I'm also having people that are not looking at this for class purposes is that you can actually just find an unqualified opinion and it's going to look exactly like the same as the book. Okay? So unqualified opinion is basically a template. Okay, and so we're going to go over that template. Now, how that template works for an unqualified opinion, it first starts off with the title of the opinion. Okay, so for instance, this title for this opinion that I have in front of me is the Report of Independent Registered Public Accounting Firm. That's usually standard on all opinions. Okay, and then the addressee. Usually the addressee is to the board of directors and the shareholders of the organization. So in this case, to the shareholders of X, Y, and Z company. And then we get to the intro paragraph. So I'm going to read to you the intro paragraph, and as I read to it, I'm going to stop and I'm going to review some of the things in these paragraphs. So we have audited the consolidated balance sheets of X, Y, and Z company as of X, Y, and Z 20X and 20XX, and the related consolidated statement of operations, stockholders' equity, and cash flows for each of the 3 years and period ending on December 31, XY. These financial statements are the responsibility of company's management. Our responsibility is to express an opinion on these financial statements based on our audit. So let's break that down a bit on that intro. The intro is telling the user of the financial statement is, we have audited these items. So what did we audit? We audited the balance sheet, the income statement, statement of stockholders' equity, and cash flows. Those are all we audited. We didn't audit anything else. Those are what we audit. And we also tell them what years we audit. So we might audit this year's and last year's, or this year's and last year's and the year before, or just this year's and we're relying on an audit from another company that did it last year's and before. So we're being very explicit to our reader or the users of the financial statement that this is what we've audited, okay? And then we say these financial statements are the responsibility of management. So we didn't create these financial statements. Management created these financial statements. So these financial statements are the responsibility of management. Our job at the end of the day is to express an opinion on the financial statements based on whose audits? My audits, our audits as the firm, okay? So we're going to, based on our criteria and our audits, we're going to do it. Now, we have some criteria that we follow, so it's not, as simple as any criteria, but it's based on our audits, not the company's audits or what they wanted us to audit from, okay? Then we get to something called the scope. What's our scope? What are we trying to do? This is what we're trying to do. We conducted our audit, so what basis are we going to conduct our audit? We conducted our audit in accordance with standards of the Public Company Accounting Oversight Board in the United States. Those standards require that we plan and perform the audit to obtain reasonable assurance about whether the financial statements are free from material misstatement. An audit includes examining on a test basis evidence supporting the amounts and disclosures in the financial statement. An audit also includes assessing the accounting principles used and significant estimates made by management, as well as evaluating the overall financial statement presentation. We believe that our audits provide a reasonable basis for our opinion. So let's break that down. What are we trying to do? Well, we are conducting our audit in accordance with X, Y, and Z organization. Now, if you are a public company, it's the Public Company Accounting Oversight Board in the United States. So we're telling people we're doing our audit based on these standards that are given to us by the public PCAOB for short. Okay, and it may be like a non-public company, maybe the AICPA, American Institute of Certified Public Accountants. These standards require, so what are the standards required? That we plan and that we perform the audit to obtain what type of assurance? Reasonable assurance. So we've been talking about this absolute versus reasonable. This document tells the reader that our job is to get reasonable assurance, not absolute. Just reasonable assurance that the information in the financial statements are what? Free from material misstatement. An audit includes examining on a test basis. So when we're examining these financial statements, we're testing things, we're sampling things. We're not looking at everything, which goes with the other sentence. We are obtaining reasonable assurance. Well, how do we obtain reasonable assurance? We obtain reasonable assurance by getting test basis worth of evidence. So we're test basing it. We're getting a sample. We're not getting everything. We're just looking at a sample. Okay. An audit includes assessing the accounting principles used and significant estimates made by management. So these are kind of more things that we're trying to do and how we get to our answer. And then we, at the end of the day, believe that our audits provides a reasonable basis for opinion. We believe that the work that we do provides reasonable basis for the opinion that we're about to issue. Okay? Then the next paragraph from scope is the opinion. So this is what we're trying to do. This is our opinion based on our work. The opinion paragraph says, in our opinion, the consolidated financial statements referred to above presents fairly, in all material respects, the financial position of the company as of December 31st, XX and XX, and the results of its operation and its cash flows for each of the 3 years in the period ending December X, Y, and Z in conformity with U.S. GAAP. Okay? So the opinion pages basically we're giving our opinion. We're giving our opinion that the financial statements that we refer to above, so we're referring to the financial statements that we said in the intro, that those financial statements are presented fairly, which means they are presented without any qualifications, so they're free from material misstatement, and that we also looked at the operations and its cash flow. So the balance sheet, we've looked at the cash flow statement. We've also looked at the income statement. Okay? And for what period? In conformity to what? We've looked at their financial statements and we reviewed them in conformity to U.S. GAAP. Okay? If this was International Financial Reporting Standards, it may say International Financial Reporting Standards. Okay? So that's our opinion. And also note in that opinion it says in all material respects. In that first or second line there, material respects. So we're not looking for immaterial things, we're looking for material things that would influence the users of the financial statements, which means, again, it helps us with our scope paragraph when we say in our scope that we're looking for that our assurance are reasonable rather than absolute. So reasonable versus absolute. Okay? Now, depending on which one you pulled, you may or may not have the explanatory paragraph. The explanatory paragraph is becoming more well known in audit reports, and that's because of PCAOB's internal control that we have to do testing on internal controls. So I'm going to read you a paragraph. This is the same paragraph that you would find, on the internet if you Googled explanatory paragraph about internal controls. But I'm going to read it here so that we all have an understanding of what this is. So this comes after the opinion, and that is, we have audited in accordance with standards of the PCAOB in the United States the effectiveness of the company's internal controls over financial reporting as of December 31st XX, based on what? Based on the criteria established in the internal controls integrated framework issued by the Committee of Sponsoring Organizations of the Treadway Commission, or COSO is what we like to use, and our report dated February X, Y, and Z expressed an unqualified opinion that the companies maintain in all material respect effective internal controls over financial reporting. Now, that one's a long one there, but basically what we're saying is we're trying to combine, really what we could do is issue two opinions, one for the internal control and one for the audit. But in this case, we don't want to issue two pieces of paper, so we're going to issue one piece of paper by putting an explanatory paragraph. In that explanatory paragraph, we're basically saying, look, we've looked at their internal controls, we've looked at it based on standards of COSO, and based on all of that, we find no material issues with their internal control. And it says right here, we expressed an unqualified opinion. So we still use the same terminology here, but we're going to issue an unqualified opinion on their internal controls. Okay? And then we give the date and we say that it's all in all material respects, so we're not looking at immaterial internal controls and how effective their internal controls are over financial reporting. Now, a couple things about this whole internal controls. Number one, you can actually have a qualified or adverse opinion on your internal controls, but still have an unqualified opinion on the audit. So think about that. You can have an adverse or qualified opinion on the internal controls, but still have a qualified opinion on the audit. And the reason why is, look, you might not have great internal controls because let's say you're a smaller company, but your books are done correctly. Okay? Just because you have these internal controls doesn't mean that your books are going to be incorrect. Okay? So for instance, let's say our internal control says that over $5,000, two people have to sign. Well, if the check is accurately written out and the check is done correctly and it was for a valid purpose, it just didn't get a second signature, does that mean that check is invalid for the purposes of reporting on financial statements? No, because that check might have actually needed to be cut and pay to a vendor for over $5,000. It's just someone just didn't sign it that they should have, okay? And it got cashed and all of that. So their internal controls might have failed them, but their audit's going to be fine. Their audit still, the books are still going to be clean. So that's one thing I think a lot of students also kind of like, what are you talking about? You can still get a unqualified opinion on the audit even if you got a qualified or adverse opinion on the internal control part. Okay? So that's one thing here on the explanatory paragraph. It might say qualified or unqualified or adverse, but at the same time, you're still going to get a good opinion on the financial statements. Okay? And then after the explanatory, we also give the name of the auditor, so it might have whatever the auditor's name, and it also might be the city and state of that auditor. And then we'll also date the report. Okay? Now, another thing on this name of the auditor, we don't sign the partner's name. So you might have a partner that's associated with the organization or the audit firm. We sign the audit firm's name, not the partner's name. Sometimes students get confused. You know, the partner will not sign their name. They're like, why are you signing the firm's name? Because you sign it with the firm's name, and then maybe on a different paper that is only for internal use purposes, the actual auditor or the actual partner will sign off on that, saying that they've approved that opinion in the financial statement. So know that that note there, and then the date there. Okay, so at the end of the day, what are we talking about here? We're talking about the 4 different types of audit opinions that we can get. We have an unqualified, a qualified, an adverse, and a disclaimer. You don't want to give disclaimers. You don't want to get adverse opinion if you can avoid them. But those are there because those do happen sometimes. Most of the times you're going to see an unqualified opinion, and then sometimes you'll see a qualified opinion, which is a unqualified opinion, but except for this part. Then we also talked about in this lesson the actual unqualified opinion. We walked you through that in this lesson so that you have an understanding of why we're doing things. And I'll tell you this: when I was a student as an auditor, understanding the audit opinion, like what we're trying to do, helped me understand the rest of auditing, because now I know, the reason why we're doing this is because in our audit opinion of unqualified, it says in all material respects, which means we don't care about the immaterial. Or when it says something that we're giving reasonable assurance, that made sense to me because we're trying to give them reasonable assurance, not absolute assurance. Okay, so that's a little bit about audit reports and audit opinions, and that will close out this kind of beginning lessons on introduction to auditing.